Hi, welcome back. This is Su Chung here, the founder and creator from Commercial Financing Experts Academy, as well as the creator of the Commercial Financing Mastery Workshop. Today I want to talk to you about commercial financing, but financing the commercial for property? No. I want to talk to you about financing residential property on the commercial financing side, using commercial money. Now, why would you want to do that? That's probably what you're asking. Well, a lot of reasons mainly, but probably the biggest one is none of the broker channel lender would be able to finance it, or they just won't fit any profile on the residential side. It just doesn't fit for whatever reason. But let's get away from the non-fitting side about the property itself. Let's look at what we can do using commercial money and why we want to do it. For example, if you ever run across any property that has unauthorized suites, multiple unauthorized suites, non-conforming, or for example, that the property is in a wrong area or the zoning is wrong. The zoning can be industrial, commercial, or ALR, agricultural land reserve. And it has some farming activities on it, for instance. None of the residential lenders would allow that. Or if you have property that have way too many acreage. If you have a property that has had 100 acre, and residential lenders can only finance up to 10 acres, you know there's going to be an issue with the financing amount, right? But let's look at properties that are unique as well. See, a lot of the monoline lenders and residential lenders don't finance these properties is because they just do not fit the profile. They can't package it and sell them off in mortgage-backed securities or whatever they want to do. One of the biggest problems that I've found out is that they have way too many properties on one PID. There are small towns in the interior of British Columbia that have, I came across one, for example, that has a carriage house on it, that has a single detached home on it, and a duplex with one PID, right? Properly identified number. And that's an issue because they just don't want to finance those properties. It's hard for them to sell. So there are other properties in parts of Vancouver that are commercial zone or flex use, comprehensive development, where their next door neighbor could be a salon, and the other side there could be a coffee shop, and you are a residential townhouse person, and you live there. You decide not to operate any business there, but you can. And these are called flex use homes that are getting pretty popular in some parts of Vancouver. That's an issue. None of the residential lenders, I can guarantee you, none of the broker channels lender would finance that. It's when they get an appraisal done, it just shows up. Take a picture, a snapshot of the front. You can see that the salon business there, and there's a coffee shop here, and you are a residential property. They won't finance it. Yes, it's a townhouse strata type, but it's just the way that the property is zoned. They don't like to do it. And there are other properties where they're industrial area, but it's allowed for residential living. Those they won't do either. Not just a caretaker suite in an industrial area. That's a different story in itself. But it's just these properties can be done. Or there are properties we come across where they're mixed use. There's a commercial spot at the bottom for a retail, grocery store, whatever it is, and upstairs is full residential. It could be 3 or 5 bedroom residential. They won't finance those either. What do? You need commercial financing or small business lending. They can do it up to $1 million. Some commercial lenders would do small business financing up to $2 million, right? But these are one of the scenarios where the property itself or the zoning itself doesn't allow you to finance on the residential side. So zoning is an issue, or non-conforming. Or large acreage. Right? Those are some of the things that you will come across where you would really need commercial financing money to get it done. Right? So those are the property issues. What about income issue? Small business, maybe the guy has none of his income is coming from his business, and he's using the business itself like as an ATM machine. He or she expenses all the money through the expense account on the company, right? So if you have a business for sale that has very low income, but it has multiple businesses, multiple corporation, Yes, he's a direct owner of them, of the corporation, but he doesn't get any dividends, any shares of the company. I've seen some really, really creative uses of their company as a general banking account. That happens. Whether the accountants like it or not, whether the banks like it or not, that's what they do. And yes, they're being penalized because they can't qualify to purchase any property in that sense. So that's an issue with the income side. There is other parts too where they change their business from for example, the following year they had a salary and they changed themselves into business for self. And it just happens that the first year they have a big contract, whatever it is, it's a huge amount of income. Yes, before they were doing salary, they're making 50K, and then for business for self income that 1 year, they make 100 or 100, say 150. If you average a 2 year, that doesn't make much money for them. They want to use, maybe the access use the $150,000. What do you do for that way? Right? There's no lenders inside our broker channel lending that will allow you to use the last year's income. But outside the channel, on the small business lending side and the commercial side, they'll recognize that income, right? And as well as if they're ready into the new year, they can also do a projected income, which is similar to what stated income, but it's more like a bonus stated income. If they know that they're growing from the business like that, they can project the growth to be another 10-15%. So even though the broker channel lenders will not allow them to use the hires of the income, outside of the broker channel lend on the commercial lending side, small business lending side, they can allow you to use plus a projection, 10, 15, depends on what the industry average is, or if they can really show that that's what they grew from the 50,000 to 100,000. Sure, there's a conservative number that they'll be allowed to use. I'm sure they're not going to, none of the lenders will allow to use 100% growth, right, for the following year, but at least 10-15%, they should be able to justify that with accounting, with the accountant preparing the projections. So these are some of the scenarios that I've come across in the past. There's various other ways that are income issue as well. Probably one of the main ones would probably be the property. If the property itself has some income issue in the past where the rents are basically low, if itself is the rental income is low, and yet they're doing the renovation, say person's coming in to do the rental, and yeah, there's a lot of those rental evictions they call it, and then increase the rent. Yeah, my doctor will be proud of my handwriting. What can I say? The rent will go up, but the rent is not there yet. But for a commercial side, we can use the appraisals, not just the market rent, but we'll be able to use that as a completed value plus the market rent increase, and using that money, be able to get ourselves money for the financing. Yes, you need at least 25% down for the investment financing on the residential side, and similar to what you need on the commercial side and small business lending. But at least we'll be able to use projected rental that we'll get, and even though there's no rent in place, we'll be able to use that using a commercial appraisal with the income approach. So that's just one of the minor things. The other thing that you want to look at is also in a scenario where the person has a salary job, there's no business for self-income, he doesn't own a business, anything like that, but they have enough to get debt service on their own, and they're building, they're buying a 4-plex or 5-plex or 6-plex unit with good income. He just has enough for the down payment, and if they have other parties providing the down payment, that's a major issue in the broker channel lender. For people who give the down payment that are not involved in the application, not involved in the financing itself, on the purchase, on title. In that scenario, you can also look at small business lending, commercial financing, because they don't really care where the down payment's coming from. Whoever's on title is going to be on title. So, and in this scenario, if you do come across a client that has only sufficient income but not enough to purchase a new property, on a commercial side, we're using a DCR, for example, a debt coverage ratio of 1.25. If the mortgage payment is $1,000, the mortgage payment is $1,000, but the rent is $1,250 net, then I can slam dunk get the financing for that property, regardless of what his income or her income is. So when you put it into a holding company, doesn't matter whether it's condo, townhouse, or any single family detached home, if it's inside a holding company, we can use commercial financing to get that done. Okay, there's more details I can go into and how to calculate and all that stuff in the future videos. But as far as it goes, on the residential side, if you can't get a finance on the residential property, the residential broker side, you can always look at commercial financing or small business lending. Just reach out to me. My name is Suo Trong, and look forward to you in the next video. Take care. Have yourself a great day.